Do you have surplus funds? Or are you in a situation wherein you want to start trading in the stock market? Or are you in a situation wherein you want to park your surplus funds somewhere, but you don't know exactly how to build your portfolio? Don't worry, my dear friends. This video is for you. In this video, we'll be covering various topics, starting from what is the stock market and how to open a demat account and how to exactly find your right or find a right portfolio management manager for you. Right. So, hello everybody. This is Samvid Naarayan, and welcome to Samvid Money Minutes. So as I told you in this video, we are going to discuss about the stock market, right? So two types of instruments can be traded in the stock market. One of the instrument is the share. A share represents a unit of ownership in a company's capital stock. So if there is like 20 lakhs capital stock and you maybe hold maybe two shares of 10 each, that is 20 rupees, then that 20 rupees is a unit of the 20 lakh shares. So that 20 lakh capital. So that is nothing but a share, right? So now ownership. A share represents a fractional interest in the company. That is, more the share you hold, the larger the stake in the company is for you. But some of the entrepreneurs, what they may do is, some of the entrepreneurs might hold a certain significant percentage of the share capital, either through themselves or through their family, so that the ownership of that company does not get permanently or does not get diluted to such an extent that that company is not theirs completely. So, for example, I think I'm not sure. You can check it out in the internet, which is Mukesh Ambani. That is the Ambani family itself as a whole owns a significant portion of, I think, 50.39% in the Reliance Industries, whereas the other shareholders who hold it, that is the public hold 49.61% of the share capital of Reliance, right? So now let's continue further. Okay, wherein the face value of each share each share has a specific denomination called the face value. The face value is nothing but if you are owning one share. Okay, if you're owning one share, for each share, how much money you're paying, that is the face value of each share. It's also called the right price of each share, right? So now, and the next thing that we are going to discuss is income. Obviously, everybody will know. Even a layman who does not know completely about the stock market would have heard the term dividend. It is nothing but the income or the return for the money that you are investing in the company, right? And price of each share, that's what I told. The face value is whatever price you have to give it to the company. But then the price of each share, also known as the stock price, also known as the rate price. The face value is different from the rate price. I'm sorry for messing up the terms. The face value is nothing but one share, the price fixed by the company for each share. But the rate price is the market price of each share. That is the price of each share that is the price under the inflationary or deflationary condition, right? Now, the company issues shares for raising capital for things like expansion and things like new settlements or new developments. If it wants to make a big project in the future, and it needs money, right? So for all of those things, the company may raise capital through issue of shares, right? Now, before moving into the next slide, we are going to talk about the next thing, which is stocks, right? Now share is a single unit, but stock is a bundle of shares that has been or is a consolidated aggregate of each share. Say, for example, this is a share. Example, this is a marker, but this is a share. Now, this share is of a 10 rupees, and let us say this share is of, let us say, Sun Production or Sun Group, basically, or any company for that matter, Reliance, for example, right? So I have one share of 10 rupees of Reliance. I have two more shares of 10 rupees of Reliance. So what I'm doing is I'm forming an aggregate of these three shares, and I'm merging these three shares. Now this unit, aggregate unit, is nothing but what we call as a stock, right? Now, just give me a moment. Yeah. Yeah. So instruments that can be traded, but okay. A stock is an aggregate value of fully paid up shares of equal value of a member merged into a fund of equal value. A stock is nothing but, as I showed you, is a set of shares put together in a bundle. A company cannot issue stock directly, but a public can own stocks, right? I hope you understand. But these two terms are used interchangeably by people, but there's a significant difference between a share and a stock. Now, the types of shares, let's quickly go through that. A type of share that represent ownership, but see, if you have entrepreneurial interest, wherein you want to interfere into the day-to-day affairs of the company, okay, but you are not interested in fixed rate of dividend, then the option for you is equity shares. But on the other hand, you don't want to control you don't want to control the affairs of the company. You just want interest rate. Then at that particular point of time, one of the suitable shares for you is the preference shares. Equity shares, you can control the company, but the rate of dividend will be less. Preference shares, you cannot control the company. You cannot participate in the, you cannot have something called voting power. You cannot participate in the annual general meeting, but you will get fixed rate of dividend. Equity shares. Okay, I hope you are understanding, everybody, right? So now, right? Now, how can you trade in the stock exchange? Very, very important question that everybody wants to know. Okay, most of you actually know some of these things. So now you need to select a broker. You need to select a broker. In order to trade in the stock exchange, you need to select a broker who is actually a member of the stock exchange, right? And only if he is a member of the stock exchange, you can trade through him. He will be appointed as an agent of you, right? Now, next is you need to place an order with him. But before that, you need to open something called demat account or dematerialization account, which I'll talk about in the upcoming slides, right? Now, after this, he will go ahead to the stock exchange, and after this, the transaction or your work is completely over, right? You can just sit and pray. Maybe for you, the shares may be allotted, but he should actually, or the broker should actually do the work, wherein he should go to the stock exchange and execute the order that you have done. But before executing the order, he'll do something called matching the order, which I'll again talk about in the upcoming slides. Now, after he has matched the order, if it is a primary market, the company will settle the shares to you. If it is a secondary market, the person or the fellow who is willing to sell those shares will sell those shares to the broker, and the broker will indeed allow those shares to you. Right, so this procedure is called settlement of shares, wherein in those days they used to physically deliver stock certificates to you, and they will get signed from the stock exchange. All these have been awarded, and all these have been beautifully regulated in an electronic form through something called demat account, right? Wherein you will get only an online certificate that the shares have been allotted, and it is indeed approved for you, right? Now, as I told you, matching the order, wherein he will go to the stock exchange and he will pick those shares out of the lot of the many shares which matches your suitability. He can either match it at the current available price or the cum rate price, or he can wait till the desired price of those shares reaches, and then he can take those shares and give it to you, or he can match it as a specific price that you have instructed to him, which is also known as the stock price. This indeed triggers a market order for execution, right? Demat account or dematerialization account, which every citizen must open with a depository participant if you want to trade in the listed securities in the electronic form. The securities are, of course, held in the electronic form through someone called depository participant. What is a depository participant? It is an institution which holds the shares of an investors in the electronic form. There are two depository institutions. One is NSDL and one is CDSL, right? This depository participant in those institutions, there will be someone on behalf of you who will be holding the shares, and he opens the account of the investors and maintain the security records. I hope you gain some insights about the stock market in this particular video, right? So please do watch the next video about portfolio management as well, and then invest in the stock market, right? So meet you in that video of portfolio management. Until then, this is Samvid signing off from Samvid. Hoping to meet you soon. Goodbye.